Consumers are speaking loud and clear. They are very, very frustrated by the persistence of high prices, and they're feeling very weighed down with the cost of living. This is not much of a surprise, particularly given this morning's CPI print, which consumers had already incorporated these price hikes from last month into their views. And this 25% increase in gas prices, these prices at the pump that are really weighing down on consumers. Their short-term outlook has deteriorated quite a bit, but there is a glimmer of hope. The long-term outlook did not sour nearly as much as the short run did. But at this moment, consumers are very frustrated and they're struggling with cost of living issues.
Joanne, a lot of people are feeling echoes of 2022. How does this reading compare historically to previous episodes of geopolitical turmoil and inflation worries?
This is a historic low and is very, very low given and sentiment readings for the past year have all been actually very, very low. And so consumers have been frustrated for some time. Given that we're in a wartime situation, it's not surprising that consumers have kind of heightened awareness and heightened worries about what's going on in the economy. Interestingly, we didn't really see too much of a reaction with respect to labor market expectations. They did sour a little bit relative to last month, but within range of what we were seeing in the last year. And that stands in contrast to personal finance expectations and business conditions. Those are much worse than we had been seeing previously.
Joanne, the administration officials, representatives are making the argument that this impact on energy is short term. Once the war is over, and again, there are negotiations for peace starting this weekend in Pakistan. Once this war is over, things will go back to normal. Is that something that you're seeing in your data?
There are some consumers who hold to that belief that it is possible that when one, this conflict will not last very long, and two, when this conflict resolves, that we may have energy prices that return to what they were before, or even be even lower. But there's so much uncertainty around this, and there's also a larger proportion of consumers who are worried that there will be consequences to this. To this Iran conflict that's going to last more than a few weeks, that it's going to last into the year ahead and potentially beyond that. Many consumers are bracing for inflation to increase quite a bit over the next year, if not longer.
How close, Joanne, should policymakers be watching this survey compared to the hard data? At what point does it get their attention?
Our data is really showing is forward looking, whereas what we often call hard data is always backward looking. So we are taking a pulse of what consumers are feeling right now. And as I mentioned, consumers have been showing very, very low sentiment, near historic lows for most of 2025 and for the first few months this year as well. And indeed, all the incoming data on consumer spending from Q4, from the first quarter of this year, have shown weakness as well. And so it shows that, consumers kind of dour feelings about the economy. It's passing through to the decisions that they make. It may not have been a massive pullback, but they're starting to pull back. And with this surge in gas prices and the possible pass through later on, if the conflict continues, does not bode well for consumers going forward.
And your University of Michigan one-year inflation forecast, the consensus was 4.2, and that came in at 4.8. And it was 3.8 just a month ago. So a big surge in short-term inflation expectations. But longer term, as you mentioned, the 5 to 10-year inflation outlook kind of came in right in line at 3.4%. So I guess that kind of suggests, Joanne, that I guess consumers are pretty realistic in their outlook that this is more of a short-term event.
That's their view at this moment. But there continues to be a tremendous amount of uncertainty over how the Middle East conflict is going to develop and to what extent supply disruptions coming from the Strait of Hormuz are going to persist. So, I don't think that people should hold on to this 3.4, 5 to 10 year inflation expectations numbers as something that is definitively going to keep going for the foreseeable future. Depending on how things look with geopolitical events and supply disruptions, this could very well change quite quickly in the months ahead.